We've asked Keith McCullough, CEO of Hedgeye Risk Management, to stick around for a few more minutes to talk about a couple of things. He's not just outspoken about Tim Geithner, he's outspoken about China. Keith is, you might call him a China skeptic. Keith, we've got inflation data coming out of China this week, and you say that's going to be a key indicator to watch if you want to know where Chinese policymakers are going.
Yeah, definitely, Eric. If you look back to 2005 when China really started managing this more proactively, currency appreciation was really met in the face of accelerating inflation reports, and we think that we're going to continue to see that here on the Wednesday evening set of data that we're going to get out of China. It's going to be inflationary, probably to the tune of about 2% year over year, and that should be enough as a leading indicator to get them to move the currency peg a little bit higher.
Keith, we have to ask you while we have you on the phone. I mean, this is a historic week, at least going back a year. March 9th, the lows. You had the S&P 500 kicking off this bull market up close to 70%, yet you say hope is not an investment strategy. What are you looking at for the S&P 500?
Well, anytime, Deirdre, we see these expedited moves, and we've seen some of the most expedited short-covering rallies across durations ever. You pointed out the yearly ascent of the S&P 500 is 68.3%. That was from March 9th, obviously, of last year. But as importantly, in the last week, we saw an S&P move of over 3% since the February 8th low when everybody freaked out about Greece and China slowing. We've seen almost an 8% rally in the S&P 500. So, you know, things do get overbought, and hope is not an investment process. So we actually shorted the S&P on Friday at 1139 as a result.
All right, Keith, we thank you so much. Congratulations on the birth of your beautiful baby girl. That is Keith McCullough, the CEO of Hedgeye Risk Management.